What is good, YouTube? It's your boy Teflon Don. Only Traders Gang back with another video. This is where we only trade every single day. And with today's video, we're going to be doing something very crucial in our forex trading journey, and that will be identifying the key levels for our price action strategy. That's how we trade. That's how I trade. I use price action strategy. So for me to execute my price action strategy, I have to identify the key levels in the market. So the key levels in the market are basically levels where there is a lot of movement and where price seems to either reject, create some sort of resistance, some sort of support. And those are the two levels that we're going to try to identify. These are my only form of support and resistance levels that I use. I don't use support and resistance throughout the charts, just to identify my key levels, and I trade from those key levels. Any support and resistance in between, I will not trade it. I will only trade when price touches my key levels. That's the discipline that I have, and that's what goes according to my trading plan. So to identify those key levels, would have to go into the higher time frame, such as the daily, the 4 hour, or the weekly. 1 hour, the minimum, depending on your strategy. If you're trading using the 5 minute charts, you can start identifying on the 1 hour. But I would suggest use the 4 hour or the daily charts to identify your key levels. So with that being said, let's start identifying our key levels. So we'll just take the rectangle tool and we'll draw zones. So for our key levels, we want to get our major support. We want to get our major support, our major resistance, and then we want to get our support. So looking at the charts, this is the previous support, and just like that, simple as that, we've identified our key levels. In most cases, you'd also identify your target, but that will be done on the lower time frame. So with our key levels, as you can see, as we go on to the lower time frames, there's a lot more noise, and on the lower time frames is where we'll go to identify our entry points and the behavior of the market. So right now, as you can see, price is actually coming to a key level. So in the case of this, we would actually wait for it to get into our level, let it play around, wait for confirmations on the lower time frames, such as the 30-minute time frame, which is a bit more reliable as compared to the 15-minute and the 5-minute, due to the fact that it has much less noise, and most of the times when candles move on the 30-minute, it's more of a guarantee that it's going to move in that direction, because the movement isn't as frequent as compared to the 15-minute at the 5-minute chart, where you'll see a lot of spikes in price, but ultimately price will return back to where it was. It'll fake you out, it'll give you false confirmations. So the 30-minute is a really good time frame for you to identify your market behavior and wait for a pattern to form. Then we'll go on to the 15-minute time frame to look for our entry opportunity. So in the case of this, we're not going to take the trade, but in the case of this, we'd wait for price to get to this level, then give us some sort of bullish confirmation that it's going to continue going up. So maybe you want to see one 15-minute candle close here, maybe a 15-minute candle close, leave a wick above this high to show that there's a bit of bullish momentum, and then wait for a confirmation, and then take the trade. And if it's going to go down, would wait for it to get down past the zone, break out past a low, maybe retest, then break the structure again. Now we'll know that this is a resistance, and that price most likely will not enter back into the zone at the current moment of our trade. So that's how we would trade our key levels. So as you can see, it's a very useful method for identifying market structure, market behavior, patterns, and then your confirmation, because it gives you much more of a clear picture as opposed to trading within this zone. Within this zone, there is no guarantee. Your probabilities are much lower because price can go either way. There's a lot of support and resistance, a lot of noise in here, and it's clearly showing that price can go either way. So in the range or within the zone, there's a very good chance that price can go up and down. It's a 50-50 at that point. So as you can see, as traders, we work on probability. That's why, for me personally, it would not be a good trade because I know that I might think it's gonna go up, but it could go down because I'm trading within the zone. There are no key levels for price to bounce off of or reject. As opposed to when it gets here, you've got either two options. You're gonna wait for it to make some sort of confirmation that it's gonna go bullish and return back to this zone, or you're gonna make a confirmation and identify that it's bearish and it's gonna keep going down. So the 15 and 30 minute are gonna really help you do that, and just having your key levels is really gonna help you elevate your trading game to a new level, because you're not gonna have as many lines on your charts. You're gonna have clean charts, and you're gonna have very good price action with very high probability setups, as opposed to trading in this zone. As you can see, it's going up, down. It could have gone up, it went down, it went up, it went down, it went up, it went down. But when it gets to this zone, you know that it's either it's gonna go down and you wait for that confirmation, or it's gonna go up, which at this point I would say about here is your confirmation. This will be your entry point. And it pulled back a little bit, gave you another opportunity. And as you can see with the 30 minute, it's very clear that you had two opportunities to enter this trade with your stop loss below. So if you're entering here, you'd probably have about a 10 pip stop loss, and you'd be protected from any reversal, because you know that for price to go below this point, something drastic has to happen. It's a very low probability thing that's going to happen. Price has a higher probability of bouncing because price moves like a ball in between two zones. So basically, this is the roof, this is the floor, and price is like a ball bouncing up and down, up and down. So when you see something like the small candles where price continues to just bounce up, 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 this is price creating momentum, which means that there's going to be a big move coming soon. As you can see, price continuously rejected. I would have taken this trade once it breaks the low. So on this 30-minute candle, that would have been a good entry point. Stops above the high, and then patience is just needed, because now that we've identified the direction of the market, it's now just about our patience and our trading psychology that's going to ensure that we get the wins that we deserve. So with all the analysis that you could have, if you don't have the psychology, it's pointless, because you're going to see price going in your direction a lot of times, but at the same time, you're going to see it go against you a lot of times. And if you're a fearful trader and you don't believe in your analysis, you'll close the trade only for you to see it go in your direction, and you'll be like, oh, come on, fuck's sake. How does price go in my direction? After I exit the trade, you'll feel like the market is watching you, but that's not the case, man. You just lacked your psychology, lacked your patience, lacked your belief in your system. And you should just have your system. You should be robotic about it. Don't hesitate to enter a trade. Once you see it breaking the lows, that's the confirmation that you need to get in. And with key levels, you feel much safer because you know you're playing with where price is reacting the most, as opposed to in the range where price is just naturally just reacting in an up and down movement sideways. But at key levels, it's either going to be a drop or it's going to continue the direction that it was going. So that's your key levels. We'll go back to our 4 hour time frame just so you see how it ends up playing out. How it ends up playing out into a larger time frame. You don't have to form new levels. You just reset this after maybe every 3 hours, 4 hours, you do some fresh analysis. But as you can see, the key levels are being respected. So as you can see, prices approaching the support. And now, because we've identified the key level, we know that there's two options. It's either going to continue back in the range and go back and retest the resistance, or it's going to continue down, possibly to this support. Maybe it'll break through possibly to this support, and that will be your target, depending on if you're taking sells or buys. And with that being said, man, that's how you identify your key levels. So just remember, man, go on to the higher time frames, look for the most recent resistance and the most recent support, and that's where you put your key levels. Just two key levels, and within those key levels, that's where you're gonna find all your setups and you're gonna execute your trades. The only other level that you'll need after that will be your target level of where you think price is gonna go to. And most times price will not hit your target level, so I'd suggest you secure your pips. As soon as you get 10-15 pips, start securing your positions and then let your runners run. With that being said, this is OTG Teflon Don, Only Traders Gang, where we only trade. I love you guys. More content to come. Deuces.